CMQ investors, this is one of those videos where we have to talk about the anxiety. I've received a number of messages from fellow CMQ investors today. People are stressed, and I understand why. Look, inflation's at all-time highs. The Dow fell 800 points today on recession fears. The NASDAQ, as one headline put it, plunged 4% on tech earnings. Google posted slowing sales growth, which didn't help there. Tesla stock had a drop that wiped out $126 billion of value today. Robinhood is cutting 9% of their staff as hypergrowth ebbs, and there's a war going on. And I almost forgot there are COVID lockdowns and potentially more to come in China right now, which has potentially has a really negative impact on the larger world economy. So a lot to be concerned about. I totally understand it, and I'm not saying that I'm above it, but I want to share with you something that helps me stay rational in times like this, and it comes from none other than Charlie Munger. Charlie Munger at the 2017 Daily Journal meeting, this was during the Q&A, he was asked about his partnership, and I believe it was in 1973. Charlie Munger's partnership lost about half of its value, and this was during a, as he described it, a 1 in every 30-year type of recession. And Charlie Munger's attitude and obviously the long-term track results, or the long-term results that he's had since then, I think are a great example for us to see. You know, one of the challenges we have as investors and just as human beings is looking or thinking long-term. You know, it's very difficult for us to see 1 month, 1 year, 2 years, let alone 5, 6, or 7 years ahead. You know, some of the greatest investors and entrepreneurs of all time have this almost superpower. But there are little ways that we can help ourselves here. And for me, learning from the sage wisdom of Warren Buffett and Charlie Munger as a young man, and I consider myself a young man now, it's really helping me right now. And I hope it helps you too. So let's listen to this clip or watch this clip of Charlie Munger. It's definitely short, sweet, worthwhile, and hopefully helps you stay sane and not do anything irrational right now. The last thing we want to do is panic sell, especially if our portfolios are, you know, holding things that deserve to be there for the long term, that we, you know, bought right. And as Jack Bogle would say, if we bought right, we can sit tight. So let's check it out.
What happened is the value of my partnership, where I was running, went down by 50% in 1 year. And now the market went down 40% or something. It was a once in 30-year recession. I mean, monopoly newspapers were selling at 4 times earnings. And at the bottom tick, I was down from the peak 50%. You're right about that. And that has happened to me 3 times in my Berkshire stock. So I regard it as a part of manhood that you're going to be in this game for the long pull, which is the way to do it. You better be able to handle a 50% decline without fussing too much about it. And so my lesson to all of you is conduct your life so that you can handle a 50% decline with aplomb and grace. Don't try to avoid it. It will come. In fact, I would say if it doesn't come, you're not being aggressive enough.